Hi everyone, today we're talking about 10 stocks for September. This is where I just talk about 10 brief stocks I'm watching in September for various reasons, and I'll go through them all. Some a name that I've left off the list because I want to leave that as a surprise, because if you watch a lot of my videos you'd be quite surprised that I'm going to be putting this stock into this list. I do talk about it a lot but never for the right reasons, but I'm actually going to talk about it in a nice way today, so you'll have to wait and see until I get onto that. I'm sorry for the yellowness. I need a proper light on this board where I am to get rid of the yellowness. I'll try and invest into one at some point. Just don't really have the time and money right now to do it, but I'll try at some point. So 10 stocks for September. Number one, I was going to put Alibaba down, but I felt like I've talked about Alibaba so much recently. I was like, I can't put that down, so I just put every Chinese stock down. There's so many like Chinese stocks that are being hit by the trade war that just keep an eye on them. There's a lot of buying opportunities if you want to go now, or just wait for the trade war to calm down slightly. I had a rough day on earnings on Alibaba because I was up like 5%, then I was down 3%. It was just a wild ride, and I don't know what's going on really, because if you look at the fundamentals of some of the companies there, if you look at the growth, you can't deny that them companies are getting worth more and more money. So yeah, just concentrate on a few of them Chinese stocks if you're into them, because there's some right bargains on right now, so keep an eye out. Number two, I mentioned this stock in the free stocks that I'm going to buy into September. I'm going to try to add some more shares into Facebook. Really undervalued company, great growth, still 20% growth. I think the EPS growth is still like 15%, and a P or forward P around 22, which is really good. Boeing, the best company in its sector, great revenue growth over the next 2 years, great EPS growth, big waiting list for people wanting to order planes. We're not running out of planes anytime soon. There's definitely still a demand there. So for me, if you're going to diversify a portfolio, I think it's one stock that you put in there just to diversify it a little bit, especially if you're a bit like me and you go for a lot of the tech stocks. Definitely good stocks in that portfolio to just diversify, just to break it up a little bit. Number four, stock that I've been tracking for a long time, and I actually just posted some really good earnings, is Toll Brothers. They smashed earnings, a very high-end luxury housing company. Thing with a company like Toll Brothers is that people that are buying these houses have a lot of money. And when they've got a lot of money, they'll be buying a lot of extras and requesting extras, more than what probably me and you could afford. You know, air conditioning, cinemas, house cinemas, swimming pool, saunas, extras like that, which add that price up a lot, which means they make more money. And also the price of lumber's been coming down recently, meaning that Toll Brothers' profit margins have been getting bigger as well. So a very interesting play, a good dividend, undervalued in my opinion. Slightly not as much as a buying opportunity as last month. I think I should have put it in last month's video, but it was a good opportunity to be getting in then, especially for a diversified portfolio. But it's still slightly undervalued in my opinion. Slightly some more room that I believe that stock could go up. Number five, probably the most undervalued banking stock right now that continues to make money however the economy is doing, is Goldman Sachs. I like JP Morgan, but Goldman Sachs I think is a good opportunity there. Very much behind its all 52-week highs, and as well as being behind its 52 weeks highs, its P is around 18, which is really good. So I just put banking stock in there. Personally, I won't invest in a banking stock, but if there's people looking at banking stocks, I'm just kind of putting my thoughts into that. Number six, Constellation Brands. This makes it every so often, probably every 2 months, because of some reasons. And Constellation Brands has been hit quite hard. It had a few downgrades. The reason why is it upgraded its stake into Canopy Growth. Canopy Growth is pretty much a company that is selling weed, and it is obviously being made legal in Canada. It's been made legal in quite a few states now, and I think that because Constellation Brands have had to lend some money to try and increase the share in Canopy Growth, and does it justify the money that Canopy Growth is going to bring in? Not at the moment. Does it in the future? And I think a lot of people are hesitant about that, and the area that it's in, and still a bit like, whoa, Not sure if you should be lending money to be invested in that. And from my point of view, I can see why. I can understand why they think that. But I think that the weed like legalization is going to be a massive area for people to be investing in at some point. I think it's going to make a lot of money. I think a lot of people, a lot of old people don't realise how much of the younger generation is actually openly supporting legalization. I would go a good 50% ish, and I think there's a big market there, especially as generations go up. I think the older generations are still a bit like not sure about that, but I think if you're from the younger generation, I think you've got a bit of a broader mind that there's a lot of income potential from that investment. Like I say, I agree that maybe it's not the best idea to be lending money to increase your stake there, but I understand why they're investing into that area and trying to build in that side of it. So I think, yeah, short term and lending money wasn't a great move, but long term I think it will pay off for them. Great PE, does it own a lot of strong brands and a dividend. It's down behind its 52-week highs a bit now, and it's at a good PE. So, I mean, right now I would not invest into that stock, but it does show some potential long term, definitely to hold that stock. I think it has it's averaged like a 30% yearly income from investing into it. And number 7, Shopify. Great website for you to set up if you're starting a business to sell things. Very far behind its 52-week high. Great growth potential in that stock. For me, it's a little bit high still per share to invest in it. I'm not really a growth investor just for that, because Shopify is very close to not making money. It's slowly crossing that stage this year where it actually makes money. For me, it's too high per share, but if you're a growth investor, you might look at that stock and go, it's at a great opportunity to buy now. That's down to you as an investor, if you're a growth or a value investor. If you watch my videos, you know I'm a bit of both, but I think Shopify is just a growth stock. It has no value there. So if you're into that sort of growth market, Shopify is definitely a stock to be looking at. eBay, definitely think this is undervalued. A good value stock, it's still hitting a 10% growth, so it's one of those value growth stocks right there. It's holding its own against Amazon, and I think it is undervalued. I think it's around about 34 per share, and I think that should be in the 40s somewhere, so I think that has been oversold since earnings. Number 9, Wynn Resorts, just one to watch, like these Chinese stocks, being hit by bad earnings. It's being hit by a CEO. It's being hit by the China trade war. It's down to 140ish now. It's just one to just carry on watching. They're on about a buyout or what have you. At some point, this stock is going to come a good buy. It's just when. I don't think it's exactly now, but it's just one to keep an eye on, in my opinion. At number 10, I cannot believe that this stock is making this list. Number 10 is going to be Netflix. Now, if you watch my videos often, you're like, why are you putting this stock in this list? Netflix, for me, even though I slate it, I say it's overvalued, it's got competition, and the stock's acting like it has no competition. It does have Disney coming onto this area, all Amazon Prime, what have you. It's still a really good growth stock. It's still growing its revenue at like 40%, its EPS at 40%. The PE is very high on it. I thought when it went up to 400 per share, I was like, this is so overvalued. It is crazy. And it's had a dip now to 330. I'm still not going to buy any shares into Netflix, but it's just one to watch. If I was a growth investor, that maybe that's one that you'd be looking into right now, but I'm not a growth investor. But as a growth value investor, if that Netflix stock does start drifting into that $200 per share territory, which I don't think it will do, but if it does, I will be taking a closer look at it then. But for me, at 330, it's about a fair value now, maybe up to 350. I don't think it should go over 350 in my opinion. But like I say, if it does start drifting into that 280 range, 270, into the 200 range basically, then I will be taking a little bit of a closer look at it, but we'll see what happens. I still think there might be some better buys on the market than that, but I just thought it's just quite funny that he did make this list after how much I do slate Netflix as a stock. It's still great growth and all that, but it's just mighty overvalued. In my opinion, and if you're invested in it, sorry, but it's just my opinion, guys. Don't hate on it. We all have our own opinions. We're entitled to our opinions, and that's just mine. Guys, give you a like, subscribe. Let me know any stocks that you're watching over in September. Any ones that I think I could add onto this list for October month's time that I can follow over next month. Let me know, guys, and I'll see you on the next video.